As Kenyan banks continue reporting third quarter results, indications are that non-performing loans could rise in the fourth quarter as banks yield to pressure from the Central Bank of Kenya to classify non-performing customers. Now, for more on whether the Central Bank is saliently cracking the whip on bad loans, we have George Bodo, who's the head of financials desk at EcoBank. George, thank you so much for making the time to join us today. As you said there in the intro, an interesting statistic that came out from EcoBank is that in the third quarter, and just looking at the industry non-performing loans, they are up by 34% year to date. Before we get as to how we can move forward, what caused this? How did we get to this point?
Thank you. The two things at play here. Non-performing loans up YTD, coverage ratio trends going downwards. What's happening is that banks are really delaying on reclassifying some of those loans that went bad in between the period between quarter 3 2011 and quarter 2 2012. And as you remember, when you went back that period, there was a significant decline in macro fundamentals. Inflation doing double digits, close to 20%. The central bank benchmark rate about 18%. So there was an upward repricing of all the repriceable financial instruments in the market. So to that extent, there was a slight rise in non-performing assets. So this is the main source of this. So what's happening is that banks, there's a salient pressure from the central bank for banks to reclassify some of these assets because they've been delaying in reclassifying them. So that's what. Really, if you look at it, there are no new non-performing assets coming in the market. Just a question of banks reclassifying what they've already had last year.
George, you're talking about ways in which banks are looking to rectify this. And if I look back at about December 2011, the central bank had wanted to come and restructure the distressed loans in the market. Why didn't this work?
There was some sort of restructuring between the Bankers Association and the central bank, which really offered a temporary reprieve for some of these distressed lenders. But what we realized is that actually some of them, the problem didn't go away, and the problem simply deferred. So what's happening is that now the central bank, banks have to really go back and look at some of those non-performing customers and then bring them on board and then classify them and then have to fully provide for their provisions. So really, it's a big problem. And the problem is that as the regulator keeps cracking the whip, we think that in quarter 4, they might have to reveal some of these non-performing customers in quarter 4. So that's a major worry that should be out there for investors.
George, how much higher do you think this could push to? Because as I mentioned earlier, we're about 37% up year to date. In the fourth quarter, how much higher do you think these non-performing loans may be?
If you look at some of the biggest exposed banks, for example, Equity and KCB, who are have the biggest exposure in terms of non-performing assets, and I think they present significant concentration risk for the banking sector by virtue of the fact that they hold about 31% of the non-performing assets in this industry, and also the fact that they hold about 52% of the non-performing assets among the 10 listed banks. So if you look at, for example, Equity, non-performing assets, non-performing customers up 100%, in excess of 100%, KCB in excess of 20%. On aggregate, they're all up 30%. So we are looking at probably as high as 50% growth on a year-to-date basis of non-performing assets in the industry. The thing is that we feel that the current disclosure in regards to non-performing customers should actually be double what they are. That's our view. That they'll not be, if they're fully disclosed, then they should be double what they are right now.
Double to where they are. Let's talk about how the central bank's monetary stance at the moment is quite relaxed. We're sitting at about 8.5%. Wouldn't this aid some relief when it comes to interest rates payments? So couldn't we see non-performing loans coming down? Wouldn't that be the rationale?
That should be the rationale ideally, but the problem is that some of the existing non-performing customers have not really benefited from the repricing, the downward repricing of the key market benchmarks. We talk about the key policy rate down to 8.5% from 18% December 2011. The thing is that the existing clients have only benefited marginally. We're talking about loan pricing from as high as 24% on average times. to just about 18%, which is minimal. And you look at the average prime lending rates in the industry right now, it's just above 14%. So they haven't really been. The thing is that the current low, sort of low pricing environment is only benefiting new assets that are being created. But the thing is that going forward, I think they have to really think about, policymakers have to think about how these non-performing customers can actually be restructured and treated very well, because they can be a problem actually in essence. The only thing is that the reason why the listed banks, KCB and Equity, are still performing very well in the market is because on overall, if you look at it, the non-performing loans to the gross loan book, which is a symbol of asset quality, it's still below 10%, but we've seen a knee-jerk upwards because we've seen KCB's
Unfortunately, George, we're going to have to leave it at that. And there's definitely a conversation we'd like to pick up again. But thank you for your insight. That was George Bordo, who's the head financials desk at EcoBank.